The insurance business provides us with float, and float is money that we hold that doesn't belong to us. It's like a bank having deposits. A bank has deposits. The money doesn't belong to it, but it holds the money. Now, when a bank holds deposits on everything except demand deposits, there's an explicit cost, an interest rate attached to it. And then there are the costs of running the system and gathering the money, which is also must be attributed both to demand and time deposits. So there's a cost to getting what they would call deposits and we could call float. In the insurance business, a similar phenomenon takes place in that policyholders give us their money at the start of the policy period, and therefore we get the money paid in advance for the product. And secondly, it takes time to settle losses, particularly in the liability area. If you bang up a fender on your car, it's going to get settled very quickly. But if there's a complicated injury or something, it may take some years to settle. And during that period, we hold the money. So we have, in effect, something that is tantamount to the deposits of a bank, but whereas the deposits of a bank, it's quite easy to calculate the approximate costs. In the case of the float that the insurance company has, you don't really know what the cost of that float is until all your policies and losses, your policies have expired and your losses have all been settled. Well, that's forever in some cases. So you're only making an estimate as you go along of what that float is costing. To date, with Berkshire, in the 29 years we've been in the business, it appears, never certain, because you don't know for sure what's going to happen, but it appears that our float has not cost us anything on average. It's been years when we've had an underwriting loss when there's a cost. There's been years when we had an underwriting profit, and so we had a reverse cost. So we have obtained that float on very advantageous terms over the years. Far more, fully as important as that. It's important to get it at a low cost, in our case, no cost. But the other important thing is that we've grown it dramatically, and so we've gotten more and more money without having any cost attached to it. And if we still had our 17 million, I guess, of float that we had in 1967, and it was no cost, it would be very nice. But 17 million of free money is worth something, but it's not worth a ton. Having 7 billion, if we can achieve that as free money, it's worth a lot of money. And that growth has not probably generally been appreciated fully in connection with Berkshire, nor has the interplay of how having zero cost money in terms of affecting our gain in value over time. People have always looked at our asset side, but they haven't paid as much attention to the liability side. Charlie and I pay a lot of attention to that, and I mean it's not entirely an accident that the business has developed in this manner, and we have intentions of trying to make it to continue to develop in this manner and in that manner in the future. But we've got competitors out there too. Float per se is not a blessing. We can show you many insurance companies that thought it was wonderful to generate float, and they have lost so much money in underwriting that they'd be better off if they'd never heard of the insurance business. But the job is to get it in increasing quantities, but above all, get it cheap. And that's what we work at. And you do that in the business through having some kind of competitive advantages. You won't do it just by having an ordinary insurance company. The ordinary insurance company is not a good business. We have it in certain respects because of our attitude toward the business. We have it because of our financial strength gives us certain competitive advantages, and we have it in the case of GEICO because of a very low-cost operation. And it's up to us to try and figure out ways to maximize each one of those competitive advantages over time. We've built those advantages. I mean, in 1967, we were not looked at that way in the insurance business. We've built a position of competitive strengths, and in the case of GEICO, they had it without us, but we have bought into it over time. It's a very important asset, and you ought to pay a lot of attention over the years as to what is happening with that asset as to both growth and costs, and that will aid you in calculating intrinsic value. Charlie?
Nothing to add.
Okay. that zone 4, isn't it?